Are you tired of trying to time the market and stressing over price swings? There's a simple, powerful way to build wealth without the guesswork. It's called dollar cost averaging. I'm Richard. I've been in the financial services industry for over a decade, and I'm your guide to navigate it. Dollar cost averaging means investing a fixed amount at regular intervals, regardless of the price. This helps smooth out market highs and lows, reducing the impact of volatility. When prices are low, you buy more shares. When prices are high, you buy fewer. Over time, this strategy averages your costs, making investing easier and less stressful. For example, investing $100 every month in a fluctuating stock can actually give you lower cost per share over time without trying to predict price swings. Just note, in a steadily rising market, lump sum investing may grow faster, but for most long-term investors, dollar cost averaging is a smart, low-risk strategy. So here's a quick summary. Dollar cost averaging helps you avoid market timing, reduces volatility, and builds discipline over time. Ready to start? Set a recurring investment account and start building wealth without the stress. Now, I know you got some value out of this. To improve your finances further, come check out my other videos.